Hello guys, welcome back. And again, this is Herminio bringing you a new topic for today. But before we start, I would like to share with you the print on my t-shirt. It reads, "It's easy to be cool when you're an educator." I hope everybody's happy as we continue with our presentation. I hope everybody's cool, especially students who are watching and listening to our presentation. So again, this is venture capital and particular in the topic of what is really venture capital. So if you are new to this channel, I would like to invite you to subscribe, like, share, comments, click notification bell, and choose all for you to get updated for our next video. So shall we start? Don't you know that there are two types of financing? There are two types of financing. One is debt and followed by equity. Now, between these two, the best that I could suggest is through equity. And under the equity financing, we have the private equity financing, and under it is venture capital. So venture capital is like a subset of, private equity financing. Now, to define venture capital is a form of private equity and a type of financing that investors provide to start-up companies and small businesses that are believed to have long-term growth potentials. So that is how venture capital is defined. It is a form of private equity and a type of financing that investors provide to start-up companies and small businesses that are believed to have a long-term growth potential. You have to remember that the last two words, it has growth potential. So without that, I think venture capital might not be different with the rest of other forms of financing. Now, the source of venture capital or the VC. So my acronym for venture capital is VC. But by the way, in financing, in investment management, the term VC usually mostly applies for the term venture capital. So where is the source of venture capital? Number one, it either comes from the well-off investors or from investment banks or any other financial institutions. Now, there are forms of venture capital. Again, venture capital is not only with the monetary capital, but also with technical and managerial support. So again, venture capital is not only limited to monetary aspects, but also to the technical and managerial support. Now, where will we allocate venture capital? Number one, venture capital allocation is for small companies with exceptional growth potential. We have to understand the growth potential there. The company that really grows, like we will like with the next topic that we will have in the histories of venture capital. I will be sharing with you companies that grows over time in a with a very high potential of growth. So who grows so well that even they started to open the business in the 1990s, and now still the company is still operating up to this time and bringing billions, millions to the investors. Second is companies that have grown quickly. Not just it has a growth potential, but it can grow quickly. And number three, it appear poised to continue to expand. So either of these three, it is really a must for investors the moment you see this to allocate some funds uh, financing in these three categories of businesses. But again, remember the terms growth and expansion in this case. So it's a growth potential, it can grow quickly and continue to expand. Now, here are some key takeaways before we end what is really venture capital. We've defined venture capital. We already give you the different forms of financing. We already give you where to allocate, what companies to finance. Now, the key takeaways on understanding venture capital is venture capital financing is funding provided to companies and entrepreneurs, and it can be provided at different stages of their evolution, although it often involves early and seed round funding. So sometimes it's start really at the very early stage of the company, that are right at the moment when the company is just starting. Number two, venture capital funds manage pooled investments in high growth opportunities in startups and other early stage firms and are typically only open to accredited investors. Again, venture capital funds manage pooled investments in high growth opportunities in startups and other early stage firms and are typically only open to accredited investors. And third, venture capital has evolved from a niche activity at the end of the Second World War into a sophisticated industry with multiple players that play an important role in spurring innovation. So again, venture capitalists are really real innovators. Without them, the speed of innovation might not that fast. And the world that we are having now, some of it, we owe it to venture capitalists. Now, watch out with our next topic because I will be sharing with you the history of venture capital, at least in the US perspective. And on the other videos, I'll be sharing with you the venture capital history in the Philippines and so on. Good, I'd like to invite you to subscribe, like, share, because there will be more videos related to venture capital. So in understanding venture capital, in a venture capital deal, large ownership chunks of a company are created and sold to few investors through independent limited partnership that are established by venture capital firms. So sometimes this partnership consists of a pool of several similar enterprises. So one important difference between venture capital and other private equity deals is, however, is that venture capital tends to focus on emerging companies seeking substantial funds for the first time, while private equity tends to fund larger, more established companies that are seeking an equity infusion or a chance for company founders to transfer some of their ownership stakes. Now again, venture capital or venture capitalists are really interested on starting companies that have potential growth and a potential to expand and keep on growing as years go by. I hope you learned something with this short presentation of what is venture capital, and I hope you see you next time. Like, subscribe, comment, and bye-bye.